Hello everybody, this is Toni Turner and welcome to the market now as of Friday, October 18th at about 2 p.m. Eastern. Well, Wall Street is struggling for direction today and is now heading lower, mainly on the back of Boeing and negative news on that front. Still, upbeat earnings reports calm nerves about the global economy after news this morning that China expanded at its weakest pace in almost 30 years. While global equities fell on the third quarter data, a raft of robust earnings from Coca-Cola and Schlumberger lifted the mood of the market earlier at least, reporting better than expected profits. So on that kind of mixed message, let's move forward, and look at three charts that will give us some insight, hopefully, into the week to come. Now, as we always do, our first chart is a chart of the daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, today when I captured this chart, the SPY was trading at $298.22, or about $29.82 on the S&P 500 itself. Now we know that the SPY has been trading in a range, since its June or May dip down here, down below its 200-day moving average. And by the way, on this chart, the black line is the 200-day moving average, the red line is the 20-day moving average, and the green line is the 50-day moving average. So we fell down here in May and June, ramped back up, and we've been trading in a range ever since. From about the highs back here up at July 26th, the SPY made an all-time closing high of $302.01, about 30.20 on the S&P 500 itself. Then came down to these lows back then at about 281. Been swiveling back and forth, kind of like a snake in a pipe ever since. Right now, again, when I captured this chart, it was trading at $298 and change. The SPY is back above the 20-day moving average and the 50-day moving average. 50 days coming in right now at $294.23. It's always good if the stock you're trading, assuming you're long, or the index you're looking at is trading above the 50-day moving average. That's kind of a medium-term, almost trend line, we can call it. So that's always a better thing if what we're looking at is trading above the green line, the 50-day moving average. So we've been trading in this range here. We can see that in the last couple of days, the SPY made a little pivot here. This may not be a high here. It may turn around and go back up. Again, we have resistance at 302. We have the 50-day coming in at 294. We have this little this lower trend line coming in here at a little over 288, 289. Lots of support in here should the SPY need it. Now, of course, we've got the 200-day here coming in at $286.24. Obviously, we always want whatever we're trading to the long side to be above the 200-day moving average. We're going back and forth here. You all know that next week we're going to be in the thick of earnings season. It would be the most bullish thing if the SPY can manage through that to remain above the 50-day moving average, and again, certainly above this 289, or definitely above the 200-day moving average. And if everything goes relatively normally, that should be okay. Maybe we stay in this range for a while. Please remember, the best, most profitable months of the year, seasonally speaking, are November, December, and January. So we have that to look forward to as long as the SPY can remain in this range, or at least toward the high end of it. So fasten your seatbelts next week. Please keep your stops in place, and we will enjoy the ride. And just to see a little more about what could happen, let's go on to the iShares Russell 2000 ETF, the IWM. As you know, in Tony's Market Club especially, we watch the IWM. It follows the Russell 2000 small cap index, and it can act as a leading indicator for the broader market. Small caps are generally considered to be companies valued with market caps from 300 million to about $2 billion. Most of them sell their goods and services in the U.S., not overseas. So it's kind of a U.S. Index, if you will, and it kind of tells us what's going on again in the U.S. Now, with lower interest rates, small caps should be happy because most of them don't have the great big fat bank accounts that the multinationals have. The IWM, however, this year never did go back up to an all-time high this year. It was 2018 when it made its last all-time high. But we're trading along here. The IWM has been the crankiest index of the main ones, and as you can see, from April it fell down like the SPY and the QQQ did, but it went way below its 200-day moving average instead of just a little bit. And it bounced back higher, but couldn't come up to this 161 level here. That was a prior relative high. So it's made slightly lower highs here, and that's a slight negative for sure. Also making, as you can see, slightly lower lows. Now in August, the SPY and the QQQ, or the NASDAQ 100, stayed above its 200-day moving average. The IWM couldn't manage that, and that was a kind of a negative thing I was watching there. But it did manage to rally, and when it does rally, it's a thing of beauty. Small caps rallied back up to this high at 158 during August and September, and that was a good thing. Pulled back down here. It's been quite a ride to about 145, but that's good because the 145, as you can see from this line, is a higher low, and that's a lot better than the lower lows that the IWM had been making. So this is a higher low. What that means is that buyers came in and bought the IWM, bought the small caps before it came all the way down to retest this low at 144. So that's positive news, and we'll take it wherever we can get it in this market. So the IWM has bounced back up. As we look at this chart today, it's trading at $152.68. It has managed to claw its way back above the 200-day moving average. That's a good thing. We want it to stay there. The 50-day comes in here at $150.69, just below. So we're going to keep an eye on the IWM. We want to see if it can manage to start back up again and perhaps head back up toward its highs at 158, or if it needs to do some more rambling around here, hopefully above this line at 145, 146. So keep an eye on it, as again, it can give us some clues as to the broader market's direction. Now our last chart here is a chart of the iShares U.S. Real Estate ETF, the IYR. The top components of the IYR are American Tower, Prologis, Crown Castle, Equinix, Simon Property Group, that's the big mall owners, and Welltower. Now this is an ETF full of REITs, real estate investment trusts. And if you can see how nicely here this year, not the most exciting ETF or industry group that we have, but certainly one of the easiest ones to on our nervous system. That's for sure. So as we see, the IYR has moved up in a pretty darn nice uptrend here, moving below its 50-day from time to time, but not staying below it. And using this 50-day as a trend line coming up to where it is now. When I captured this chart today, it was trading at $94.29, above its 200-day moving average, nicely above its 50-day, which is coming in at $92.64, certainly above its 200-day moving average. So with lower interest rates, which of course cause property to be, real estate to sometimes get a lot more action because it costs less to buy a piece of property. Usually REITs do well in low interest rates environment, and that's exactly what the IYR is doing. So with interest rates lower, it's marched steadily higher, and I think this is a beautiful chart considering that in August and September the S&P 500 was down, wandering around its 200-day moving average, but not so the IYR. It stayed up here above its 50-day. So you can see how valuable it is to know that when you're in a rocky market and interest rates are low, you can always turn to ETFs like the IYR and say, hey, what are you doing? Is there a place I can hide out in the storm that won't be quite so exciting? And the IYR has managed to stay above its 50-day moving average all that time and is moving a little higher today. So please note again that the IYR is trading at $94.29. If the market remains relatively positive in the coming week and the expectation for the Fed to lower interest rates at the end of the month stay in place, I may add shares of the IYR to my trading portfolio. Now, I am going to place an initial stop as a close below the 50-day moving average, which again is coming in at 92.64. I realize this is a really tight stop, but I am really not into high-risk plays in this particular market environment, not at this time. So if the market gets hectic next week, you may want to keep an eye on the IYR. And now for upcoming economic reports, but first, please join us this coming Monday for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now, let us help. During the session, we talk about which side of the market to trade. I give you a mini trading lesson, and I also give you stocks and ETFs, actually about 6 of them, that may become ripe for high potential trades. Can't attend the live session? No problem. The recording is available to all of our members just a few minutes after the session ends. Tony's Market Club is a low-priced, high-value opportunity to learn more about the market, how to trade more successfully, and make more money. So please join us. For more information, go to the link on this screen or just simply click on the button below. And now on to next week's economic reports. Please remember we're going to be in the thick of earnings season, so we're going to the market could get a little bouncy as these large cap momentum companies announce and kind of move the indexes around. Economic reports wise on Monday, not much going on. Tuesday we have existing home sales. Wednesday we have our usual crude inventories. Thursday, we have durable orders, our usual jobless claims, new home sales, and nat gas inventories. And on Friday, we'll have the University of Michigan Consumer Sentiment Report. That's the final report. So again, join us at Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.